Let's get into some business news now. Lesaka Technologies says it's been able to shave off losses experienced in the first quarter. The company, formerly known as Net1, narrowed its net loss by 42% in 3 months to end September. Now, the Nasdaq and JSE-listed firm says net losses narrowed to 105 million rand versus the 183 reported last year. Lesaka has more than 72,000 informal retail merchants that use its cash management solutions business EasyPay. Lesaka's Southern African CEO Lincoln Mali joins us for the results. Now, Lincoln, looking at these particular results, it's been a tough one for consumers, and you are, of course, playing in the lower end of the market. How have you experienced the consumer in South Africa currently?
I think our consumers have been very resilient, Goteo, in difficult times. We have seen quite resilience both from our merchants, which are informal merchants, mainly spaza shops. We've also seen resilience from our social grant recipients or our customers. And so our 1.3 million active customers have shown resilience in difficult times. And we've been able to turn around the business over the last 2.5 years. And so for us, this is a milestone for this quarter that we're able to report an operating income for the first time in 5 years and narrow the loss, as you mentioned earlier. So it is part of the growth of our business and the turnaround of our business overall.
Lincoln, tell us about cutting that debt at the company. What has the journey been like, and why has the company had so much debt hanging over its head?
I think we made a very transformational acquisition of the Connect Group. And that Connect Group acquisition has made great growth for our business. And obviously, we financed that through shares and debt. And then we've been working down our debt. And we've been able to do that by disposing of non-core assets and be able to manage cash within the business and be able to pay down. And also, interestingly, our bankers have also been seeing the progress in the business and being able to allow us much more better rates. And again, shows, the positive, growth of the business and the positive turnaround of the business. We are now generating cash when a year ago we were losing cash. We're now operating income profitable when a year ago we were, making a loss.
Now, the group's revenue rose to about 2.5 billion rand year on year. You, of course, offer services of people buying airtime using EasyPay, but also, like you said, you do have grant recipients that use your services to bank and also to get insurance. Where did this revenue come from specifically?
In our merchant business, where we've got our spaza shop, informal market, we've shown growth in revenue in the merchant business by 20%, and we've shown growth in the consumer business by 13%. So again, this shows good revenue growth in a very difficult environment.
And, those margins are quite tight. I mean, if you're serving people that are grant recipients, you have to have some sort of special or savings there when you do trade. How are those affecting the business?
I think what we've tried to do is to try and run a quality business. So we don't look for growth's sake. We look for quality businesses and quality accounts. So if I look at the way we have got throughput through our various devices, that throughput has grown even in these times. Our margins have held even in these difficult times. If I look at the consumer side, we're having our clients still having low loss ratio in that sector whilst we're having these difficult times, and seeing our customers pay our claims, pay our their premiums in insurance in difficult times. So the quality of our business is an important thing to be able to maintain margins. And we're managing our costs very tightly in these difficult times.
You also offer microloans to some of your clients for as much as 2,000 rand. Are you not worried that during these tough times, high interest rates, that the repayments or the defaults rather would go up, especially given how fragile that consumer is?
We've been watching very closely this because we've seen the reports from the banks, the retailers, and everybody. The consumer is in difficulties, but we've not seen any material deterioration in the quality of our loan book. Our loan loss ratio remains at below 6% per annum, and again, this is something that we don't take lightly. We do regular reviews of our vintages, making sure that there's no delinquencies and all of that. And up to now, that business and that book is still a quality book, and that is pleasing for us. But it's something that we're watching all the time, given the difficult circumstances that we find ourselves.
And how's that default ratio looking at this current moment?
As I said, our loan loss ratio is still below 6%, so we're still seeing quite a good quality book. And that's something we're very proud of, and it's something that we watch all the time to make sure that we're making comparisons, we're getting outside people in to look at the quality of our book, and the quality of our book remains quite resilient.
The acquisition of Connect Group, how has that enhanced operations at the business? I know you are at the point of sale, so has this maybe propelled some of the sales that you used to have from last year?
Yes, I mean, for us, the acquisition of the Connect Group has really transformed our business. This is a high-growth business. If I just to give you a few stats, if I look at our VAS business, the throughput in our VAS, airtime, data, all of that, we've seen that grow 58% year on year. And it's growing 12% quarter on quarter, or call it 46% annualized. That shows the growth that's in that informal market. If I look at card throughput, we're looking at 56% year-on-year growth, about 6% quarter on quarter, or 24% annualized. So for us, the Connect Group has been very transformational and has made us to have a dual-sided ecosystem where we can service our customers on the consumer side and service our customers on the merchant side.
You also serve 72,000 informal retail merchants. What are they telling you about the South African consumer, especially in the lower band? Are they spending less on airtime or getting less loans or more loans at this time when they need to reach the end of the month?
We're finding that people are judging their spending, but they're spending on the things that really matter. And so when we offer these services to our merchants sell basics, your bread, your milk, your airtime, your data, all of those things are necessities. And so because we are well positioned in that, we see those growth. We also see growth in people using their cards for transactions. Cash is still dominant and cash is still king, but we're starting to see a digitization as more people are using cards for smaller transactions in spaza shops and areas of that sort. We will be launching an informal index, tomorrow. Again, as part of showing what is actually happening in that informal space. There is a lot of growth happening in that space, which does not mirror what is happening in the formal space. And we're quite well positioned because our business is there for cash when people want cash and is there for digital when people want digital. We're supportive of cash when people want cash, but we're supportive of the changes to digital. People want that change to digital.
And looking into next year, maybe when those interest rates go lower, what are you hoping for the business, especially since you are able to swing away from that loss and into a more positive operating income?
We put a guidance for this financial year. We've reaffirmed our guidance, and we think that the business will see an even better economic environment in the second quarter. And so we're well poised to take advantage of the opportunities that come from that. Of course, in those parts where we do lending to small businesses, when the interest rates are come down, that will help the quality of our book. It will help us being able to lend to some of the small businesses.
All right, that was Lincoln Mali, Lesaka's Southern African CEO, talking to us about the lower band of the economy, and seems a lot of revenues also coming out of that particular sector.